could have got double the risk to reward. But let's see if price even kept going our way. Also, you know that, yeah, there we go. You know that this was a winning trade anyway for me. When I saw this now, I was like, yeah, we're really in the money. What's going on, gang? It's your boy Roms with another trade breakdown. So what I have here is gold, right? This is actually a trade that I took a couple of months ago, but I was going through my trading view charts and I realized I still had the trade marked up, but it was because it was quite a clean trade and one that is good to learn from. I thought I'd go through it on YouTube and break it down for you guys. So hopefully you can learn something from it, right? So we've got gold here, and this is back in September, but what I've done here is I've started on the 1 hour time frame, and I'm just giving you guys the 1 hour time frame because it's the time frame that I'll say that makes the most sense. I don't think we need to go any higher than this, so you can get the context of what the trade was based on. The 1 hour gives enough context on that, right? So what we've got here, So we've got the 1 hour time frame. On the left hand side here, you can see we've got this channel, right? So this channel has, the price was bearish at one point and price was coming down. You can see it's a clean channel down, which created trend line liquidity, okay? And then price trickled back up and eventually took out this trend line liquidity and also took out this high to the left, okay? And then price mitigated this inducement high. So if I mark this out as a key high, you can see here that price over here mitigated that high. So the question is, you know, why is this important and where was we looking at next? So first things first is, yes, we took this main liquidity in the trend line, and then we took also this internal liquidity here, this smaller trend line on the lower time frame, as price induced the high to the left and induced the internal liquidity or the internal highs into the previous inducement. So it induced into the inducement, mitigating the previous inducement, all right? And then you can see price then, you know, gave us a nice shift or relevant breaker structure, and then moved off bearish, okay? So as price moved bearish, you can see that this fair value gap to the left here was pretty much annihilated, right? So you can see price just came straight through it. Price came to the bottom of it, went straight through it, and then it tapped into this candle, this, you know, candle here at the bottom with a large wick, right? So this fair value gap did not hold anything at all. It was completely violated. So the likelihood of price respecting this area and then moving higher again was slim at this point. But I'm going to go down to the lower time frame in just a moment to explain what I was looking at the time and why I believe that this low right here was my next draw of liquidity, okay? So some people could say, you're taking out all of this trendline liquidity to the left, mitigate this inducement higher. Perhaps, you know, you could target, see, this low all the way down here, right? The question is, like, why not? Why not target all the way down here and just hold it for a swing? And the matter of fact is because first of all, gold itself is such a volatile pair, it can do an absolute madness, right? So even since then, I trade gold a lot less now because it is so volatile. And there are smaller, say, fair value gaps, like here, for example, that price could come down here, respected that, and then went higher, or a few other things, right? So whenever I'm trading any pair, if I'm honest with you, if I'm looking for a swing, I'm only going to hold small volume for the swing. And that's me being transparent. I like to take the majority of my partials within the day, right? So I'm never going to leave more than 20% running overnight unless the price has barely moved and I'm break even, and then, you know, it doesn't make sense taking partials. But for the most part, I'm taking 50 to 80%, typically 80% away before I go to bed that evening. But looking at this now, so we had the inducement of this trend line. We had the inducement of this high to the left. We had this fair value gap filled, and we had this inducement high mitigated. And as it mitigated the inducement high, it induced these internal highs as well, and then gave us a relevant breaker structure. Price then came up and mitigated this inducement, which was the internal inducement, and then started to come lower, right? As I mentioned, this fair value gap here was annihilated, it was violated, and it wasn't showing any signs of holding price to push price higher. So this now when we get into the lower time frame price action. So in my eyes now, the fact that this fair value gap didn't hold and it was violated, I saw this low as my next draw of liquidity, which was at a level which I believe that price could attack. And if you look at price here, you can see it's just engineering liquidity, creating, you could say, trend line liquidity on a higher time frame, right? Or on a lower time frame, sorry. And or in this time frame, you could even say to this, because like what, 1, 2, 3 key touches, and you got multiple touches in between as well. So I was looking at this and I was bearish on this, and I wanted this low to be taken. So I thought if I could get a good trade, you know, above the highs, you know, we want to sell above a high. If I could get a good sell above a high, then maybe I could hold it down to the bottom here. So if we go down to the 15-minute, this price gets a little bit clearer, right? So what do we have here? So what makes this interesting is the fact that on the left here, I've already marked out a lot of the liquidity to make things a little clearer, okay? So on the left here, you've got these relatively equal highs. You had this high here that swept or induced these highs and then came lower, but it failed to break this low, which is my main target, right? Price then started to, you know, hold and staircase further up. And then, you know, it engineered equal lows here, but he said this low was just about induced. You can see this, so this low induced this Asia low to the left, as you can see, just about. You see the wick, right? And then price continued bullish, created more liquidity. Then it took this high before, you know, so it created a channel just after Frankfurt opened. It started a channel, okay? Came lower, came back up, took out the high to the left, so took out liquidity, gave another sell opportunity if you could find one in there at the time to come back down. But still, price did not take out the main low that I was looking for, okay? So what did price do again? Price then induced another low to then go higher. So this was now Frankfurt open. This is when I started to look at price and to look at opportunity potentially coming my way. So as you can see, I always talk about the fact that price has to induce lower before it goes higher, or it has to induce higher before it goes lower. That's what price will regularly do. If you look at the market maker model and just inducements in general, price will induce one way, then go the other way. And that's the best way to find and trade opportunities. Then that's the best way, best place to take your trades if you've got a clear draw of liquidity or a clear bias. So the fact that my draw of liquidity was a low, I was always going to wait for a high to be induced before I take a sell. I'm not going to try and sell, say, down here, or try and sell after a low's been taken. It makes no sense. I would have to wait until a high is induced. For example, here, a great selling opportunity. However, it didn't hold to the low. And this is why it's important to take partials. Imagine if you got into this trade up here, and it was a strong trade because you took out the high to the left. It induced the high to the left. It induced the channel. And you say you held full volume and you wanted to hold full volume until this low here. If you didn't take partials, which would have been silly, if you didn't take partials, it would have meant that you'd come back out. And what I'm about to show you is that you would come back out at break even. Okay, so this is why partials are also key. What I was looking for now is the fact that I saw that these lows over here on the previous day were induced. This low was induced, right, by this wick here, and price was gonna move higher. So I knew that if I wanted to find the sell, and I knew that the low was my draw on liquidity, I obviously wanted to wait for a high to be taken or a high to be induced before I got into a sell. So I was waiting for this high to be induced, but not just that, I wanted more confluences. So if I look to the left, you can see here is you've got this high, which had taken a swing high to the left and then given us a shift or a break of structure, right? So this is a solid, I would call that a strong high in the context of what I was looking for. So I knew that if price would come back up and then just tap into this order block and give us, you know, high time frame efficiency, then I knew that, and it could take the high on the way up, inducing this high, and then give us a nice sell entry or sell model to enter, then I would take the trade all day long. So if I go down to the 5 minute, let's have a look to see what happened. So you can see here, first things first is that price is clearly efficient here on this high. So this high, taken the high to the left, price was efficient, okay? So there was no no imbalances or fair value gaps on the 5 minute to try and get an entry. So there was no valid entry place here for me anyway, okay? So I was waiting for this high to be induced, and then I wanted to enter. So let's see what happens. If I start pressing play, speed it up a little bit, cool. So the high is now induced. So what do I want to happen next? So ideally, you know, what I want to happen next is I want to see price give us a relevant break of structure. So I would want this low to be taken on the 5 minute in an ideal world. And that would be a nice relevant break of structure. And then for sure, because of the other confluences that I've got, and I've got my draw in liquidity, and I've got my other confluences, I would definitely take the sell from, say, here, right? And then stop loss above the high, target the low, ideally, for like almost a 10R, and then keep it moving, right? But let's see how it plays out a little bit, because there's a couple lessons in here. So price comes down beautifully, aggressive, right? Gives us 2 lows taken out, 2 key lows. So you've got the first, you've got the relevant break of structure here, you've got another shift here, another key low here, and then you've got also, you've actually got a BPR, balanced price range here, or fair value gap, right? So you've got balanced price range here, and then you've got the M5 mitigation here, right? So let's mark this as supply M5, right? So this is what I was looking at. So I then wanted to just take the trade based on the M5. However, I was looking at this on the M1 as well, because if I can get a better risk to reward, then why not? So if you look at this now, right? One of the key things I like to do is to make sure that I get into the trade and a trade doesn't leave without me. I also like to just enter on the final push up. So the final, you know, aggressive move up before the reversal. That's why I like to take my entries. And on this occasion, it was here, right? It was this low. Make it clear for you guys. It was this low. That was the final push up on the M1, and that met perfectly with the M5, right? So I was like, okay, I'm happy with that entry. However, there was also just M1 efficiency fill as well, or fair value gap fill, which was another opportunity potentially. But there's so many occasions when the M1 efficiency is not filled, or the M1, say, final candle isn't mitigated, and you missed out on the trade because you wanted to refine the trade. The thing is, the fact is that the trade itself could give you double the risk to reward, but it depends on if you'd rather double the risk to reward, but potentially miss the trade, or would you rather just be in the trade and get your profits, right? It's all about preferences. It's all about what you prefer. Let's go back to the 5 minute for a second. So I then set my limit, and then let's see what happens. So 5 minute price is playing around a little bit. It's created a high. So you could say maybe it's even better because it's created a high, so it's giving us more liquidity to take into the mitigation. Boom, right. So you can see here, giving us a high with a fake break of structure or fake low, and it's come back up. This high is taken. So I'm triggered now. I'm in this trade. Let's see what happens next. Okay, so price went a bit higher, and then price actually mitigated the M1 option as well. As you can see, M1 was also mitigated. So at this point, although you know, I know I made my decision to enter the trade on the M5, I'm still fuming at the same time, right? Because it's like, I could have got double the risk to reward, but at the same time, I have to keep the mindset and keep the idea of the fact that I entered at that point for a reason. I followed my trading plan. So even though, yeah, I missed out on maybe double the RR, it doesn't matter because I followed my trading plan, and my trading plan is my trading plan for a reason, right? It's one of the psychological games of trading, isn't it? So the psychological parts of trading. So it is what it is. But let's see if price even kept going our way. Also, you know that, yeah, there we go. You know that this was a winning trade anyway for me. But when I saw this now, I was like, yeah, we're really in the money. So let's see how it played out a bit more. So if I keep pressing play, I'm gonna go a bit faster. Right. So what makes this an interesting trade now is because now we're in Asia, okay? So I only want you to think about this in real time for me, because this wasn't an easy one to manage. So if you look at this now, during Asia, let's call it, I get to 5R up, right? I'm up 5R. And I got into the trade at, say, 2-ish, yeah, about 2:15 in the afternoon. And this is now Asia, so this is the end of my night now. I'm about to go to bed and I'm 5R up, but I know that my target is down here at this low. Yeah, my target is down here at this low, but I know that there's a chance that maybe I'm wrong. Maybe price may reverse and it might go higher. You don't know, right? So at this point, I had to make a decision. Do I hold all the trade? Do I take partials? Or do I just close the whole trade out? And there was a few things that I was also looking at. First things first was the fact that we had this fair value gap here. Got a key fair value gap where price came in, it's tapped in, and price has pretty much respected the fair value gap. When I say that, what I mean is the body has stayed within it, meaning that it wasn't quite validated. Obviously, ideally, you'd want if you were looking for a reversal here, you wanted to buy and go bullish, you'd want the bodies not to even feel the fair value gap at all, whereas it did a bit, so that gave me a bit more confidence, right? But then we also had a fair value gap up here as well, and I knew that there's a potential that price could come back up here, feel this inefficiency, and then move in my desired direction. It all depended, right? But what I actually did was I decided to take 80% of my trade off. Or was it 50? I can't actually remember. That's me. No, tell a lie. I remember now. It was 50%. I can check my journal, but I believe it was, I took 50% of the trade off because I genuinely believe that, my target was here and that we would go in the right direction. So I took 50% of my trade off and I left the other 50% running, and let's see how it played out. So if I just press play, boom, look at that. So you could say it's a beautiful trade. This is in the 15 minute and it hit my target the following day around midday, right? So on the 5 minute, you can see here, there was actually a high that price took, mitigated this high here, and then literally I didn't have to do much else the following day. I just kept an eye on it. It didn't give me much of a scare, if I'm honest, and then it hit my target for a nice 9 to 10R trade. I thought it was one that was worth covering and sharing with you guys. Hope you enjoyed it, and if you want to see more trade breakdowns, remember to hit that video in the corner. Don't forget to hit like and subscribe and to follow me on socials, all right? God bless, take care, and I'll speak to you all soon.